So I'm back after a long time. I know I have been gone for almost a month, but I'm back posting a video now. I will be posting every single week where I will do a weekly recap, show you guys the trades that I take every single week and kind of like why I took those trades. Keep this in mind, I am not a 100% profitable trader. So come here, watch me, learn something, and look what I do, and I kind of like wanna journal my own journey from like not being profitable, posting videos on YouTube to go and become a profitable trader and start at the some and someday show you guys that yeah, I was not profitable also, but now I'm profitable. And kind of like do my weekly recap, like journal or whatever you wanna call it. And a lot of you guys might be wondering what happened to the challenge that I was doing, turning $50 into $25,000. I felt that I won't be doing that anymore, and I think I was just forcing myself to take trades since I'm not a profitable trader. I was just trying to just make 25K. But yeah, I will do such a challenge in the future, not now. And yeah, let's go and get into today's video. And I'm back. So last week I took only two trades. Like I took two trades. One was a 1 to 3 risk ratio almost, and the other one I lost 1%. So once again, yeah, let me show you guys the trade that I took. And it was one was on Nasdaq and the other one was on S&P X 500. So I have marked out the Monday last week since I took the trade on Monday. So as you guys can see over here before the market opened, we were in this consolidation area, as you guys can see over here on the hourly. So I kind of had no bias for that day, to be honest, because I was just gonna look uh, for the liquidity sweep. So like which side are we gonna sweep the liquidity and see a push? Why? Because if you look around here, this, if you like take from this low to this high, equilibrium never got hit over here. We did see a push to lower. We took out these, saw like a bit of reaction to the outside, to the upside, and I was like, okay, price might come, sweep up this high, this hourly high over here to just push lower, or it wants to come lower to take out these liquidities to the downside and push higher. And something, something else that I kept in mind was like, look over here. On at this day, on Friday, we had a big push down, then a big leg out, and we had a bit of consolidation, like not a good chart over here. So the same thing happened over here. We did not hit a good like price action, and then we see boom, a big leg to the downside, and then we see a push to the upside, and then we see a bit of a big push to the downside. And the same thing happened over here on the Friday. Look, push to the upside, and price did come lower, as you guys can see. So I did not have bias, but my bias changed after when the market opened. Like as you guys can see, market open, we came and took out like all of this liquidity. We took out like we did not take out this low. Like we took out this low. We go on a 50-minute time frame. We took out like this 50-minute liquidity down here, which is in line with that, and some 5-minute. So we did sweep like majority of this liquidity to the downside, as you guys can see these lows over here. And then my bias changed. I was gonna be bullish, so I take my trades on 1 minute time frame. So let's go 1 minute time frame and show you guys my entry for that day. So after that, over here, as you guys can see, after this we came took out the majority of liquidity as I explained. Then I was just looking for a setup after the micro got high, like over here, 50. I don't really take trades before that because I want to see like let the market just play for 20 minutes. Its price action, do its own thing, and it's like always volatile. We see more price action like in the first 20 minutes of the market. We see a lot of fake outs and market wants to come and sweep liquidity and to just push to the other side. And yeah, after that, as you guys can see over here, first of all, for my first confidence for me go long was this inverse fair value gap over here. As you guys can see, this is right around the micro got hit. Like we see a big leg to the upside. We broke 1 minute structure over here to the upside. We did fill into this bearish fair value gap. We never disrespected that, so that was not entry for me, of course. And then I marked out this bullish fair value gap. Boom, for my tech confluence to like for it to come fill into this, disrespect this bearish fair value gap or inverse fair value gap to just me go long off of here. What a lot of traders makes mistake is just like I have been trading for almost 2 years now. Again, I'm not profitable, but I have a lot of market experience. I see like this happen every single day. A lot of traders, what they do is that, okay, we break 1 minute structure to the upside, boom, on hourly, we come, fill into this bullish fair value gap, we see a two candle close as a bullish, they might go long off of just off of that. Boom, put their stop loss of there and just target some liquidity to the upside. And if you had done that, you would have been stopped out. That's what a lot of trader makes mistake. And one of other confluence that I really like and I don't take trades without that is inverse fair value gap. Inverse fair value gap is really important for me. So so I did not enter it over there. As you guys can see, price did come lower, swept out again like these lows on the hourly, and we made like this bearish fair value gap over here. Then I was like just looking for this to get disrespected. So look, we can disrespect this bearish fair value gap. And again, to be honest, we did hit this liquidity down here. I think this is that hourly low that market did not take. And I was just like thinking that the market might wants to come to check out these, but that never happened, and that's why I got a really bad entry. So once this got disrespected, then we had a bullish fair value gap over here that got filled as my target confluence. Boom. Like, look, liquidity sweep, we have seen already that. We came on 1 minute, inverse fair value gap, like bearish fair value gap getting disrespected. We can fill into this bullish fair value gap, close as a bullish. But I did not go and just enter it off of that. Sorry. I did not just enter based on that to put my stop loss just below this and to go long. And if you ask me why, because first of all, I really wanted to see this bearish fair value gap to get disrespected because we had this liquidity down there. I really didn't want to see the price to come lower and check out this as the same thing happened over here. And I entered just around here. Once this candle closed, I entered because we disrespected this and put my stop loss below this, like the week, not week, or whatever you want to call it, this candle over there. And my first take profit was this 1 minute high over here, which would give me a 1 to 4 risk reward ratio. And then if we go on a higher time frame on 50 minute, my second take profit was around here, this high, this hourly high over here, this one. And I let around 10% of my profit to run all the way up here to just managing my like trade, and I took around 50% off when the first take profit got hit, which was this high over here. I took 50% off my position over here and let the other one to run, and it got me almost a 1 to 3 risk reward ratio. So yeah, this was the trade that I took on Monday, and on Tuesday I lost 1%. I lost the trade, and I think I did really bad at that day. But yeah, let's go on the chart. Let me explain to you guys. So let's go now hourly. So it was on Tuesday, like the next day. Where is it? Here. Boom, look here. I was a bit confused to what to do with my bias, to be honest. Like, if we look here, we already came on the pre-market, took out this high, we swept the liquidity to the upside, then price did come lower, took out like this hourly low over here. And that was like, okay, I was like, either, like, I was a bit confused with my bias, either to be go long or short. And as you guys can see, we did have this big buyout and like equilibrium never got hit. Let me just mark from this low to this high up here, like equilibrium never got hit. So I was like, okay, price might want to come check out this equilibrium because we already have seen a higher time frame liquidity sweep, but that never happened. And price did go higher, and it come higher. We again swept a bullish fair value gap to the upside. Look, the only reason that I was focused was this equilibrium. I think the mistake that I made that time is that I forgot that I trade on 1 minute time frame. I don't trade on a higher time frame. I should not have cared about this equilibrium because it's on a like based on a higher time frame, the price to come all the way down here. And I think that's the only mistake that I got, and I got confused of my bias at that day. But yeah, after we came to out this high, this hourly high over here, I was 100% sure that I was going to be bearish for the day because look, we did come and before the market took out this high, like this hourly high, we swept the liquidity to the upside. And if you go on the lower time frame, let's go on the 50-minute time frame. So price did push higher over here, as you guys can see. So I was just trying to look for a 50-minute retracement to just take a trade on a 50-minute retracement because I was sure now that it wants to just keep going higher. So I went to, if you go on the 1 minute time frame, I was looking for short. So let's come here. So as you guys can see, this is right around the 1550 where I take my trade. And we see a big leg to the downside. We disrespecting this bullish fair value gap over here, as you guys can see. Boom, disrespecting this bullish fair value gap, breaking 1 minute structure to the downside. And I was like, bet this wants to just at least to come take out this low. And after that, like we see this price come into this bullish fair value gap, respecting that. Look how clean it respected this bullish fair value gap. So now my first confluence of liquidity sweep has happened. My second and the most important confluence is inverse fair value gap that has happened with respect disrespected this bullish fair value gap. Price did come into this bullish fair value gap as of my third confluence and closed below that. But I made a mistake. I waited for too long because I really wanted to see a bit of like push to the downside, a bit of sell-off pressure because I was like, okay, bet this is the 1 minute order block over here. It might want to just come and go higher based on this 1 minute order block. So after that, I just went on and entered, sorry, I entered based on this candle, put my stop loss above this high. My take profit one was this, top of this 1 minute order block over here. As you guys can see, that would have been that was my take profit one. It would have not been even a 1 to 1 risk reward ratio. And my second take profit was like this low over here, like 1 to 3 risk reward ratio, 1.33 risk reward ratio. I think I should not have taken even this trade at that day. And what I could have done better is that, okay, we see the 50-minute retracement to the downside. Cool. I should have been looking for long instead of for short. Why? Because there was no reason for me to be bearish at that day. But yeah, so price did come, hit my take profit one. I did not manage my trade. I should have taken off 50% off my position over here, put my stop loss at break even, and let the other one to run to take out this. So that's the first mistake that I made, was not manage my trade. So manage your trade sometimes if you kind of like don't feel like the trade is a good, like the setup is that good. And if you look, if you go on the hourly time frame, if you go on the hourly time frame, look, it's just so clean. It's so bullish. Like we broke 1 minute hourly structure to the upside. Like I mean, like there was no reason for me to be bearish. We hourly broke structure to the upside, boom, bullish. If we go on a 4 hour time frame, 4 hour is bullish, and we have kept this like really bullish buy. People are buying a lot, so I don't know why I was gonna look for bearish, because maybe because of the liquidity sweep and this equilibrium, as I told you guys over here. This this is what fucked me over, really. I really wanted to see price to come into this equilibrium to just push higher, but that never happened. And I could have done, I could have been looking for a long instead of for short. If I was looking for long, I could have gotten a really good setup. Let me show you guys. Okay, off here. So as you guys can see, I could have to just say, okay, price did come lower. We see the 15-minute retracement. Boom, over here. If you go on a 15-minute time frame, mark out like from this low to this high. Boom, price did come into this 15-minute fair value gap, filling that, respecting this. As you guys can see, this equilibrium on a 15-minute time frame completely, and closing as a bullish. And what I could have done better, go on a 1-minute time frame, and look over here. My first confidence would have been like this bearish fair value gap, boom. Again, disrespect that, disrespecting this bearish fair value gap. Then we have a bullish fair value gap over here, the 1 minute that got filled, boom. And to be just sure to see a bit of my more a buy pressure in the market, I could have just entered off of this, put my stop loss just below here, and take profit one just this high. That's what I could have done better. But to be honest, I'm not that mad. The only thing that I'm mad about is that I did not manage my trade at all. And one more thing is that I could have just entered like this. Since I am trying to get a 50-minute retracement, that's already happening. Okay, we see this bullish fair value gap, candle closes a bearish. I could have just entered off of that. That would had given me a better risk reward ratio. Yeah, in the rest of the week, I did not took any kind of trade because there was, first of all, there was no setup, and I was behind the chart and did not took trade because there was no setup, to be honest. And yeah, if you go on the last week,